Hi, it's Jo and Steve from Freshagenda, back again this week. And this week we're talking about our latest Global Dairy Directions quarterly report and what that's showing us about farmgate prices here in Australia as well, Steve.
In terms of the big picture, what our outlook is showing that it's going to get a little worse before it gets better. We're looking now at our global supply and demand chart, which compares export availability and import demand and how that projects forward.
So we're still in a slight oversupply situation, with EU spring still a little bit in the balance, and that still continues to be an important driver. So some of the hot items that are influencing the outlook at the moment, we're just looking at some of the key issues that we've looked at in the quarterly.
So around that we've got 7 numbered hot items that we think are the big shapers, but still the EU is the biggest one.
It is, yeah.
It's still driving the scene, and well, fortunately the milk isn't flowing yet, so it's still quite weak. I mean, the spring is yet to kick in, so
yes.
I think there's warmer weather coming, so it's still hang on.
Yeah.
It could still worsen.
Farmgate prices have come down a little bit in Europe, so they are getting a bit of a signal to slow.
I mean, the big story is the value of fat.
Yep.
We'll probably come on to that in a minute, but that's propping up the value of milk across the board.
Yep.
And what was expected late last year, there will be a plunge in values. That isn't going to be the case now, and we're going to see those farmgate prices keep tractors out of the middle of Brussels for 2018, and I don't think we're going to see a fleet arrive because milk values appear to be staying around the 30 cents, euro cents mark for some time, and then getting better as the situation works out.
Yeah, and as you said, that really is reflecting very strong butterfat values, that we're really seeing these historically high prices not really burning off demand too much, still very low stocks. And that's really supporting prices across the board as well, butter as well as cheese.
Yeah, the important relationship we keep reminding people is this connection between the value of the skim and butter composite, or that stream, has a very strong relationship. And looking at that chart now, the strong relationship between that and the value of cheese, commodity cheese in Europe. Right, that's a very strong connection.
The demand for high price butter is still good. Cheese consumption, which is very important in the EU product mix, is still pretty healthy, and it needs to stay that way.
And the indicators in Europe are that the economy is going to stay fairly strong through 2018, and that's
Sure.
an important prop.
Yeah, that's right.
So looking around from that, we go back to our hot items chart. I mean, if we look through the year, the next big thing really is the New Zealand spring.
Yes. Which seems a long way away at this point, doesn't it?
Yeah, no, that's right. And it's a reset each year in New Zealand. You sort of go, well, what happened last year? No, it's a reset. So the conditions will change. It's still raining and still fairly moist over there. But you would think that you got to count on the fact that they would rebound. They've got two years of being knocked around.
Yes.
There are limits that are affecting their production. They're mostly longer term limits. I guess the financial constraints around farm businesses will be a factor.
Sure.
Impacted.
So let's bring all this back to what it means here in Australia for Australian farmers. And we're updating our outlook on southern farmgate prices today. And it's a little bit brighter than a month ago.
It's nudged up a little bit, and certainly a lot better than it was a couple of months ago.
Sure.
when we were seeing the European situation quite worse. And the read on that was that the values had fallen and were going to stay low because of the amount of milk coming. That's quickly changed, so and that's got better in the last month, in fact. And what we look at is what's that mean for where's that going to prop values over the next 12 months, and we've seen more positive signals there that give us confidence to lift that a little bit. I think that's, we're looking now at our projected CMV, so that we do a commodity milk value based on the returns of those commodities back into the Australian milk pool after conversion costs. So that's our tracking, and that as we go over the next year, and we bring that then back to a milk price based on what the value capture might be. Which we also see being a little stronger, that we've got some consolidation happening in the industry, a big step today. So that's going to change the dynamics and the way that the industry bargains with customers.
That's right.
We think that'll improve values.
We hope. Particularly for commodity cheese, which is, again, as we've mentioned before, that's been the really tough part of value capture for local companies over the last 12 months or so.
The other thing I think to say is these are the fundamentals. This is what we suggest the fundamentals are. There is more intense competition out there at the farm gate in Australia, and the developments that are unfolding now in terms of the ownership of the MG business, what that'll mean for competition between players trying to sort out the market afterwards. New buyers in Northern Victoria, Fonterra filling a cheese plant, Bega extending pricing into the second half of the year. They're all factors, and that's going to keep farm gate prices firmer. And for farmers, that should be good news, but it's how well the bargaining works from here on. And that's a different environment now. So that's probably a good place to wrap it up.
Great.